What's going on, everybody? Jeff here. Welcome back to the channel. Wow, a 23-point drop in the market from pre-market high to intraday low. CPI coming in hotter than expected. Investors were pricing in CPI to actually come in lower than expected for a few reasons. You look at the entire market over the past few days, slowly grinding to the upside. Gas prices have been steadily decreasing. The White House has remained completely quiet. Okay. And also, other commodities have come down month over month as well. When you're looking at the face value of these, a lot of things have changed. Investors are starting to price in a totally different market over the short term. And I really want to cover everything from A to Z for you. So let's get right into it. First off, as you can see, we started off bleeding heavy red candle as soon as that 8:30 CPI was released, and we just steadily decreased all day long. Now, the last four CPIs, whether it's been a gap up or a gap down from the CPI beat or miss, the following day has followed suit, meaning if there was a gap down like there was in June CPI, report on the 10th, it was followed by another gap down and vice versa when we gapped up. However, CPI days are a little bit more range bound than they were today, and therefore I think it sold off just a little bit heavier into the close. But let's get into what exactly is happening and especially what's going to happen over the next few months. I think I'm going to be one of the first ones, as obviously this data just came out, to kind of share exactly what I'm seeing. And this is very important because when you see these small bear market rallies, you see these pops, you need to understand what is happening in the bigger picture. So let's cover it all. First off, 8.3%. It was a 0.1% month over month. Now, energy has continued to lead to the downside, okay? Negative 5% month over month, which was actually bigger than the July numbers of negative 4.6. Okay, now energy services, because of natural gas, the inflation of natural gas, as winter is coming, was a little bit less than it was the month prior. And I do expect natural gas to continue to rise. Okay, everything that is happening over in Europe is, and because the natural demand, okay, because we're getting into the winter seasons, are going to cause natural gas to continue to rise a little bit. All right, so we have seen gas prices continuously go down. Okay, we are getting to a point, all right, as obviously we're in September, by the time November hits, all right, that the 1 million of barrels a day being released from the Strategic Petroleum Reserve, that's going to stop, okay? Meaning demand is going to rise on oil because of winter, and the supply is just going to be even less than it is as of right now, causing prices to potentially rise. Now, the futures are a little bit different. And the reason why I want to mention the futures in oil are a little bit different, I can show that chart later, is the fact that a lot of times going into recession, they know that demand for oil decreases. However, we're not quite at that level, okay? So we're looking at gas prices that have continuously decrease. Well, how much lower they can continue to go. Now you're looking at the average thinking 380, and hey, listen, I was paying, 220, okay, 2 years ago. However, this massive decrease over a short period of time, how much lower can it continue to go month over month? That is one thing that you need to take into consideration. Here is where things take a complete turn. Okay. So you look at shelter, 0.7%. Now, shelter makes up a very big percentage of the CPI. Okay. And it's just because the entire, GDP that is based off of our real estate market, the real estate market is a huge factor to the entire economy. Okay. So it's weighted very heavily inside the CPI. And as you can see, this 0.7 month over month, this is the highest, okay, since going back up to where this chart shows from February, 0.7% month over month. Here's where things really change. We have seen a decrease in the average national home price. Okay, now this changes depending on what market you're in. If you're in a very hot, market like Denver, I'm sure prices have kind of neutralized a little bit, but they're not really going to come down because Denver is just an area that is heavily crazed. If you look at a state like Florida, where a lot of people from where I am up in Connecticut and other areas are moving to, whether they're buying their primary homes down there or they're buying secondary homes, in general, the Florida market has held up a little bit better. So markets, they vary depending on where you are. But generally speaking, home prices, okay, as on a national level, have gone down. Okay, you can see where they peaked out in July and where they are, or I'm sorry, it peaked out in June, where they are in July, and it continues to go down in August. So that begs the question, okay, of, well, how come we are seeing this increase, okay, in the CPI data for shelter, okay, when home prices have continued to go down? This is where things really change. Mortgage applications have gone down, they continue to go down. All right. Home prices have not decreased enough to where your monthly payment, okay, a person can still afford because of rising interest rates. So what happens when the mortgage rates, or I'm sorry, what happens when the mortgage demand goes down? Okay. Less home sales, home prices are going to decrease. But where are these people going to live? Well, they're going to continue to rent. Okay. So the rental market has seen a massive demand increase as more people, okay, are seeking to not only continue to rent, but to opt out of rent. Let's say, listen, they sold their homes, all right, they're pending, they're trying to buy a new home, they're in a short term rental. Well, now they're converting that to a long term rental. Now, I have seen in my area over the past couple of years. Now, the last investment property I purchased was the end of 2019. I've seen a lot of people come from New York and really buy these houses that I look at and say, listen, based on the market, based on my experience, this is not going to cash flow well. They're getting maybe $100 to $150 profit per door. And let me tell you, that is a recipe for disaster. Okay, there's just not enough cushion in case things happen of natural repairs. Okay, tenants not paying, moving out, vacancies, and so forth. What we are seeing is massive rent increases. Okay, the price to rent is continuing to increase. You're looking at areas, and from where I am, there are suburbs, there are medium inner city areas, and you're watching some of these prices increase over the past few months by 10, 15, 20%, sometimes even greater. You look at all the Facebook talks pages, and people are absolutely up in arms for what landlords are trying to charge. The reason also being is because they overpaid. Okay, and this is what they priced in: rental increase. You are seeing a heavy demand in rental, and that is not set to slow down anytime soon until the housing market takes a cools down a lot more. Now, because this is based off a percentage, okay, when you're looking at rents going up, from an average of 1,100 a month to 1,400 a month, okay, which I'm seeing here in my market. I talk to other people, in other markets, and you're seeing all over, okay, the internet as well. You're looking at that price increase of being about 27%, 26%. Well, think about how much of a decrease homes have to go, okay, in order to be able to kind of offset some of that increase. And when you're looking at just the median sales, well, we've got 413, and here we're at 408 or 403. Okay, when we get down to 397, home values have to come down a significant amount, and it takes a lot of time. The housing market is lagging and the rental market is much quicker. I've seen some of these shifts happen before. I've studied this and I've done some research. So when you're looking at the CPI when it comes to the next few months, well, listen, there's a couple things that you can probably bank on. How much more is gasoline and energy going to continue to go down, especially when the people are arguing, your investors are already going to start pricing in, the SPR is going to stop releasing that million barrels a day. Winter's coming. With the issues that are going on over in Europe, with the Russian, price cap. Okay, what's going to happen? So this is still very, very new. As obviously the data just came out, it's going to take time for investors to adjust this. Now, personally, I do think that a 100 basis point rate hike it's beginning to be a little bit more in the question now. Now, if you asked me a few days ago, my thought process was, listen, why would they do 75 and then try to hammer it even higher as of right now when their target is, let's say, 4, getting up to 4.5%? Well, everything that happened with the entire CPI and seeing that, okay, we had the 9.1, we got the 8.5, it was a little bit lower at 8.1. Well, now we got 8.3, and after a few months of rate hikes, the answer is nothing has worked as of yet. Okay, so investors are starting to price that in. If we do get a 75, obviously on the 21st, all right, a little bit of relief to happen. If we do get that 100, okay, which Jerome Powell has been very hawkish, you could see there's a lot more downside to the market. Now, think about the bigger picture when it comes to the market. All of these rallies that we're getting these 5, 6, 7, 8% rallies, is a very good time to potentially look at longer dated short positions. Okay, it's a little bit, they move a little bit slower, your percentage gains aren't as higher, however it's a little bit easier to manage and a little bit more comfortable. So just, you know, think about that. And guys, that is it for this video. I'll see you in the next one.